I need to be completely honest with you from the start. What you are about to hear is not for everyone. In fact, most people who learn these strategies will ignore them, make excuses, or convince themselves they don't work. That is fine. This information is not meant for most people. It is meant for the few who are ready to act despite fear, to move despite uncertainty, and to build wealth regardless of what society tells them is safe. The title says, "Don't try this yet," for a reason. These strategies require mental preparation most people lack. They require accepting responsibility most people avoid. They require taking action most people fear. If you are not ready to operate outside conventional wisdom, to face criticism from friends and family, and to trust yourself over the crowd, then you should not implement what follows. Wait until you are ready. Because half-hearted application of these strategies is worse than no application at all. But if you are ready, if you have reached the point where comfortable poverty is more painful than uncomfortable growth, if you are willing to be called crazy by people who are broke, then what follows will change your financial life permanently. These 12 forbidden strategies are used quietly by the wealthy while remaining hidden from the masses, not because they are illegal, not because they are immoral, but because they work so well that widespread adoption would disrupt the entire economic structure that keeps most people dependent. Before we begin, understand this. I am not telling you to try these strategies today. I am showing you they exist. What you do with this information is entirely your responsibility. Hit the like button and comment where you are watching from. Then decide if you are truly ready for what comes next. Chapter 1, The Forbidden Debt Strategy. The first forbidden strategy is using debt as a wealth-building weapon. Everyone tells you debt is evil. Get out of debt. Be debt-free. Stay away from borrowing. This advice keeps you poor. The wealthy use debt strategically and aggressively to multiply their wealth, while you struggle to stay debt-free and broke. Don't try this yet if you still believe all debt is bad. Don't try this if you cannot distinguish between consumer debt that enslaves and strategic debt that liberates. Don't try this if you are not willing to borrow money to make money. This strategy requires complete mental reversal from everything you were taught. Here is the forbidden truth. Every billionaire, every wealthy dynasty, every empire was built on massive amounts of debt. Not because they could not afford to pay cash, but because debt multiplies returns exponentially. If you have $100,000 and buy one property with cash, you own one property. If you borrow $300,000 and buy 4 properties, putting $25,000 down on each, you own 4 properties with the same capital, same money, 4 times the asset base, 4 times the cash flow, 4 times the appreciation. Marcus believed debt was evil. He saved for 15 years to buy 1 rental property with cash, no mortgage, no risk. Safe. His property generated modest returns. Across town, Daniel borrowed aggressively. He bought 6 properties using strategic debt. Yes, he had mortgages. Yes, he paid interest. But he had 6 income streams, 6 appreciating assets, and 6 times the wealth accumulation. After 10 years, Marcus owned 1 property worth $400,000. Daniel owned 6 properties worth $3 million. The difference was understanding debt as a weapon. The forbidden strategy is this: use other people's money to acquire assets that generate more return than the cost of borrowing. If you can borrow at 5% and invest at 15%, you keep the 10% spread. The bank's money just made you wealthy. This is the game the rich play constantly while telling you to avoid debt. But here is the critical part. Strategic debt must always be backed by cash-flowing assets. Never borrow for consumption. Never take debt for depreciating items. Never leverage for speculation. Only use debt to acquire income-producing assets that can service the debt and generate profit. This is disciplined leverage, not reckless gambling. Don't try this yet if you cannot make this distinction. Don't try this if you will panic when markets fluctuate. Don't try this if you need everyone's approval. This strategy will make conservative people call you reckless. Let them. They will stay broke while you build wealth. The practical application is to start studying leverage. Learn about debt-to-income ratios, loan-to-value percentages, interest rate structures, and cash flow analysis. Then, start small. Leverage one property. Learn the mechanics. Build confidence. Once you master small leverage, you can scale to larger positions. The wealthy leverage billions. You can leverage thousands and grow from there. This strategy is forbidden because it empowers you beyond the system's control. Debt-free individuals have no leverage. Leveraged individuals multiply wealth faster than employment could ever provide. Try this when you are ready, not before. But know that it exists and it works. Chapter 2, the forbidden tax strategy. The second forbidden strategy is paying almost zero taxes legally through business structure optimization. Everyone accepts paying 30 to 40% of their income in taxes as inevitable. The wealthy pay single-digit percentages or nothing at all. This is not evasion. This is understanding the code and using it exactly as written. Don't try this yet if you are not willing to structure your life through business entities. Don't try this if you think minimizing taxes is wrong or selfish. Don't try this if you are not ready to invest in quality tax strategists. This strategy requires complete restructuring of how you earn and manage money. The forbidden truth is that the tax code is written by wealthy people for wealthy people. But it is public. Anyone can use it. Employees get destroyed because they earn through wages which are taxed maximum. Business owners and investors play a different game. They earn through entities that allow deductions, deferrals, and preferential rates. Same earnings, completely different tax treatment. Victoria earned $200,000 as a W-2 employee, paid $70,000 in taxes, took home $130,000. Her brother earned $200,000 through his S corporation, deducted $80,000 in legitimate business expenses, cars, travel, meals, home office, phone, internet, insurance, retirement contributions, paid tax on $120,000, took home $170,000. Same income. $40,000 more wealth accumulation annually. Over 30 years, this compounds to over $2 million, not from earning more, but from structuring better. The forbidden strategy extends beyond deductions. Capital gains are taxed lower than income. Real estate offers depreciation that creates paper losses offsetting real gains. Opportunity zones eliminate capital gains entirely. Qualified small business stock offers exclusions. Retirement accounts offer tax deferral. The code is filled with advantages, but only if you know they exist and structure to use them. Don't try this yet if you are not willing to pay for expertise. Tax strategists cost money, but they save multiples of their fees. A $5,000 strategist who saves you $30,000 annually is a 600% return. This is the best investment possible. But most people are too cheap to pay for expertise and too expensive in the taxes they pay as a result. The practical application is to transition from employee to business owner, even if you keep your job. Start a side business. Consult. freelance, create products, anything that generates business income and opens access to business deductions. Then, hire a tax strategist who understands aggressive but legal tax minimization. Not an accountant who just files returns, a strategist who engineers your entire financial structure. This strategy is forbidden because widespread adoption would collapse tax revenue. The system needs maximum extraction from those who don't know better. Once you learn the code, you keep your wealth instead of donating it. Try this when you have income to protect. But know that every dollar you pay in unnecessary tax is a dollar you could have invested into assets. Chapter 3, the Forbidden Income Strategy. The third forbidden strategy is creating multiple income streams simultaneously rather than relying on one source. Everyone believes in focusing on one job, one career, one path. This concentration creates fragility. The wealthy build multiple streams that diversify risk and multiply opportunity. Don't try this yet if you are not willing to work harder in the short term for freedom in the long term. Don't try this if you cannot handle multiple priorities. Don't try this if you need simplicity and comfort. This strategy requires complexity, discipline, and energy that most people lack. The forbidden truth is that single income streams are maximum risk disguised as stability. When your one employer decides you are unnecessary, your income goes to zero. When your one business struggles, everything collapses. When your one investment fails, you lose everything. Concentration is not focus. Concentration is vulnerability. The wealthy know this and build multiple streams deliberately. Robert relied on his corporate salary exclusively. 6 figures, good benefits, felt secure. Then at 52, downsizing. His single income vanished overnight, no backup plan, no other options, years to recover at reduced income. His false security was revealed as maximum risk. Meanwhile, his friend built 5 income streams: salary from employment, income from rentals, dividends from stocks, profit from side business, royalties from a course. When one stream slowed, others continued. She had real security through diversification. The forbidden strategy is to build income streams in different categories: active and passive, linear and exponential, employment and entrepreneurship, stocks and real estate. This diversification ensures that no single failure destroys you. It also ensures that multiple growth paths can compound simultaneously. One stream grows 10%, another grows 20%, another doubles. The portfolio compounds faster than any single stream could. Don't try this yet if you are not willing to sacrifice leisure time temporarily. Building multiple streams requires working evenings and weekends initially. Most people are not willing. They want ease now. The wealthy trade ease now for freedom later. This is the difference. The practical application is to systematically add 1 stream per year. Year 1, keep your job but start a side business. Year 2, add dividend-paying stocks. Year 3, add a rental property. Year 4, create digital products with royalty potential. Each stream starts small, but compounded over 10 years, you have 5 to 7 streams, all generating cash flow. At that point, losing one stream is inconvenient, not catastrophic. This strategy is forbidden because it creates independence. People with multiple income streams don't need permission from any single employer. They cannot be controlled through job threats. They have options. This is dangerous to systems requiring dependent workers. Build multiple streams. Gain independence. Try this when you are ready to trade comfort for freedom. Chapter 4, the Forbidden Investment Strategy. The fourth forbidden strategy is investing in asymmetric opportunities where potential gain vastly exceeds potential loss. Everyone invests in balanced mutual funds with symmetrical risk-reward. The wealthy hunt asymmetric investments aggressively. This difference creates the wealth gap. Don't try this yet if you cannot handle losing money on some investments. Don't try this if you need guaranteed returns. Don't try this if you are not willing to learn how to evaluate opportunities. This strategy requires risk tolerance and investment education most people avoid. The forbidden truth is that all significant wealth comes from asymmetric opportunities. Start a business with $10,000 that becomes worth $10 million. Buy stock in an unknown company that becomes Apple. Invest in real estate before an area develops. These are asymmetric. Downside is defined and small. Upside is unlimited and large. This is how fortunes are built. Compare this to conventional investing. Balanced mutual funds return 8% annually on average, better than savings accounts. But you will never become wealthy at 8% annual returns. You will accumulate slowly. The wealthy accept 8% returns on some capital while simultaneously taking asymmetric risks with other capital. They diversify not just across asset classes, but across risk profiles. Jennifer invested $100,000 into index funds. Safe, balanced, expected returns. After 20 years, she had $400,000. Not bad. Her friend invested $50,000 into index funds for stability, then invested $50,000 across 10 asymmetric opportunities. 8 failed completely. 1 returned 10 times, 1 returned 50 times. Total portfolio value after 20 years was $3 million. Same initial capital. Different strategy, massively different outcome. The forbidden strategy is to allocate capital in tiers. Safety tier for living expenses. Growth tier for conventional investments. Asymmetric tier for high-risk, high-reward opportunities. Most people only have safety tier. The wealthy have all 3 tiers working simultaneously. This structure allows taking risks with money you can afford to lose while maintaining security with money you cannot afford to lose. Don't try this yet if you have no capital to invest. Build capital first. Don't try this if you cannot evaluate opportunities. Learn first. Don't try this if you will panic when asymmetric bets fail. Most will fail. That is the nature of asymmetry. The few winners must more than compensate for the many losers. The practical application is to start with small, asymmetric positions. 5% of investment capital in opportunities with 10-to-1 or better upside to downside ratios. Startup investments, angel investing, cryptocurrency, option strategies, real estate development. Each has asymmetric potential. Each requires education. But each can multiply wealth in ways conventional investing never will. This strategy is forbidden because it creates independent wealth that cannot be controlled. People with asymmetric wins no longer need employment. They have capital to deploy. They have options. They have power. Learn asymmetric investing. Try this when you are educated and ready, but know it is the path to significant wealth. Chapter 5, The Forbidden Time Strategy. The 5th forbidden strategy is treating time as more valuable than money and structuring life accordingly. Everyone trades time for money at fixed rates. The wealthy buy back time aggressively, even when it seems expensive. This mentality shift changes everything. Don't try this yet if you cannot afford to pay others to do work you could do yourself. Don't try this if you believe doing everything yourself saves money. Don't try this if you are not willing to value your time at rates higher than you currently earn. This strategy requires completely reframing the time-money relationship. The forbidden truth is that your time is your most valuable and non-renewable resource. You can always make more money. You can never make more time. Yet most people waste time to save money and wonder why they stay broke. They spent 2 hours to save $20. They do tasks worth $10 per hour because they make $50 per hour and think they are saving money. This is backwards thinking that guarantees poverty. Marcus made $100,000 annually, about $50 per hour. He mowed his own lawn to save $30, cleaned his own house to save $80, did his own taxes to save $200. He was spending 5 hours weekly on tasks worth $20 per hour, while his time was worth $50 per hour. He was losing money by saving money. Meanwhile, his wealthy friend paid others for everything below his time value and used freed time to build businesses. One stayed broke. The other became wealthy. The forbidden strategy is to calculate your target hourly rate, then systematically eliminate everything below that rate from your schedule. If your time is worth $100 per hour, never do tasks worth $50 per hour. Pay someone else. If your time is worth $50 per hour, never do tasks worth $20 per hour. This feels expensive initially. It is wealth building long term. Don't try this yet if you are not willing to invest in leverage. Hiring people costs money. The return is time you can deploy into higher value activities. But you must deploy that time productively. If you pay someone to clean your house, then watch television with the freed time, you wasted money. If you pay someone to clean, then use that time to build a business, you multiplied wealth. The practical application starts with time audit. Track 1 week, every hour cataloged. Then assess value of each activity. What percentage of time is spent on tasks below your target hourly rate? For most people, this is 70% or more. Then systematically delegate, automate, or eliminate low-value tasks, cleaning, cooking, yard work, administrative tasks, email management. Every hour freed is an hour available for wealth-building activities. This strategy is forbidden because it requires spending money to make time. Poor people hoard money and wonder why they have no time. Rich people buy time and use it to make more money. This cycle repeats. One contracts, the other expands. Value your time appropriately. Try this when you are ready to invest in leverage. Chapter 6, the Forbidden Education Strategy. The sixth forbidden strategy is investing heavily in private education from people with proven results rather than conventional institutions. Everyone believes formal education from universities is the path to success. The wealthy pay mentors and coaches directly for concentrated wisdom. This difference determines outcomes. Don't try this yet if you are not willing to pay thousands for courses and coaching. Don't try this if you think free information on YouTube is sufficient. Don't try this if you are not ready to invest 10% of income in education. This strategy requires viewing education as the highest return investment possible. The forbidden truth is that universities teach you to be an employee, not an entrepreneur. They prepare you for jobs, not wealth. They give you credentials, not capabilities. The truly valuable information about building businesses, investing, and creating wealth is not taught in any university. It is held by practitioners who learned through experience, and they charge for their knowledge. Daniel spent $100,000 on a 4-year degree that prepared him for a $50,000 job, 70 years to break even on his educational investment, assuming the job lasts. His friend spent $100,000 over 10 years on courses, masterminds, and coaching from successful entrepreneurs. Each investment generated immediate returns in business growth, investment gains, and strategic insights. His income grew from $50,000 to $500,000 in the same 10 years. Same educational investment. Completely different returns. The forbidden strategy is to bypass traditional institutions entirely and buy education directly from practitioners with results. If you want to build a business, pay an entrepreneur who built successful businesses to mentor you. If you want to invest in real estate, pay a successful real estate investor to teach you their system. If you want to trade markets, pay a profitable trader to show you their strategy. This concentrated wisdom is worth exponentially more than generic university courses. Don't try this yet if you are not willing to vet educators carefully. Many people sell courses with no results. You must verify that your educator has achieved what you want to achieve. Proof required. But once you find legitimate educators with proven results, paying them is the best investment possible. The practical application is to allocate 10% of gross income to education. If you earn $50,000, invest $5,000 annually in courses, books, coaching, and masterminds. If you earn $200,000, invest $20,000. This feels expensive, but knowledge compounds. One insight can generate 10 times the course cost. One connection can create opportunities worth millions. The return on knowledge is unlimited. This strategy is forbidden because educated populations are dangerous. They see through conventional wisdom. They question authority. They build wealth independently. The system prefers you getting useless degrees that trap you in debt while teaching nothing practical. Invest in real education. Try this when you are ready to pay for wisdom. Chapter 7, The Forbidden Mindset Strategy. The seventh forbidden strategy is deliberately cultivating wealthy person thinking patterns while rejecting poverty programming. Everyone absorbs beliefs from their environment unconsciously. The wealthy choose their beliefs consciously. This mental discipline creates reality. Don't try this yet if you are not willing to face your limiting beliefs. Don't try this if you cannot handle the discomfort of changing identity. Don't try this if you need validation from people who are broke. This strategy requires mental work most people avoid. The forbidden truth is that poverty is a mindset before it becomes a condition. Rich people think about money differently, speak about it differently, and believe different things about wealth than poor people. These mental patterns create the behaviors that create the results. Change the pattern, change the results. But changing mental patterns is harder than changing actions because the patterns operate unconsciously. Christina made decent money, but thought like a poor person. Money is hard to make. Rich people are lucky. I could never do that. More money, more problems. These beliefs were invisible to her but controlled everything. They caused her to avoid opportunities, undercharge for services, and stay small. Her income matched her beliefs perfectly. When she learned to identify and change these patterns, her income multiplied. Same person. Different beliefs, different results. The forbidden strategy is to audit your money beliefs ruthlessly. What do you believe about wealthy people? What do you believe about your ability to create wealth? What do you believe about money itself? Your honest answers reveal your programming. Then deliberately install new beliefs through affirmation, visualization, and consistent mental discipline. This is not positive thinking. This is mental engineering. Don't try this yet if you think beliefs don't matter. They matter more than actions. You can have the best strategies, but if your beliefs sabotage implementation, strategies fail. Beliefs must change first. Actions follow automatically. The practical application is daily mental practice. Morning affirmations stating your new money beliefs. Evening visualization of wealth already achieved. Continuous monitoring of internal dialogue. When you catch yourself thinking poverty thoughts, immediately replace with wealth thoughts. This feels fake initially. Over time, the new pattern becomes automatic. This strategy is forbidden because belief change undermines control. If you believe you can create wealth, you don't need anyone's permission. You act independently. You build aggressively. The system needs you believing wealth is for other people, not you. Change your beliefs. Try this starting today. But maintain consistency daily. Chapter 8, The Forbidden Network Strategy. The eighth forbidden strategy is deliberately infiltrating networks of wealthy people even when you don't belong yet. Everyone networks with their peer group. The wealthy network upward aggressively. This determines trajectory. Don't try this yet if you are not willing to feel uncomfortable in rooms where you are the least successful. Don't try this if you cannot handle imposter syndrome. Don't try this if you are not ready to invest thousands to access premium networks. This strategy requires ego management and financial investment. The forbidden truth is that most wealth is created through connections. The deals happen in rooms you will never see unless you deliberately engineer access. Meanwhile, most people network with friends from childhood who are all at the same income level. These networks generate no opportunities. Comfortable, but useless. Gregory networked exclusively with other middle-class professionals. They discussed sports and complained about work. 20 years of networking generated 0 valuable opportunities. His colleague invested $15,000 to join an entrepreneur mastermind. Felt completely out of his league. Everyone else was making millions while he made $100,000. But he stayed, asked questions, added value. Within 1 year, 3 partnerships formed from that network that generated more income than his previous decade. The network paid for itself 100 times over. The forbidden strategy is to identify where your target network congregates, then invest whatever required to gain access. Masterminds, conferences, private clubs, exclusive events. Yes, it is expensive. $20,000 for a mastermind feels insane. Until you realize one connection from that room can generate millions. The network is not the cost. The network is the value. Don't try this yet if you cannot add value to networks above your level. You must bring something: expertise, connections, effort, humor, insight, something that makes people want to include you. Value extractors get ejected. Value contributors get elevated. The practical application is to research premium networks in your field. Find the mastermind where the wealthy gather. Then, commit whatever financial stretch required to join. Once in, add value relentlessly. Make introductions, share insights, help solve problems, build reputation as a valuable member. The opportunities follow automatically because opportunities flow through networks. This strategy is forbidden because it breaks class barriers. The wealthy prefer keeping their networks exclusive, but anyone willing to pay and add value can access these networks. Once you are in, you have access to opportunities invisible to 99% of people. Invest in network access. Try this when you can afford the investment. But know, it is among the highest return investments possible. Chapter 9, The Forbidden Business Strategy. The 9th forbidden strategy is starting businesses that solve expensive problems for wealthy clients rather than cheap problems for poor clients. Everyone thinks business is about serving the masses. The wealthy know that selling expensive solutions to small numbers of wealthy buyers is exponentially more profitable. Don't try this yet if you are not willing to charge premium prices. Don't try this if you believe you must be affordable to everyone. Don't try this if you cannot position yourself as high value. This strategy requires confidence in charging what you are worth. The forbidden truth is that selling $10,000 solutions to 10 people generates $100,000 with 10 clients. Selling $100 solutions requires 1,000 clients for the same revenue. Which is easier, serving 10 people excellently or managing 1,000 transactions? The math is obvious, but most people choose high volume, low price because it feels safer. It is not. It is harder. Patricia built a coaching business serving anyone who could afford $50 per session. She was always busy, always stressed, always broke. Too many clients, too little revenue. Her friend targeted executives and charged $5,000 per session. She had 8 clients. Same time commitment. 10 times the income. One strategy requires grinding. The other requires positioning. The forbidden strategy is to identify problems that wealthy people experience and build businesses solving those problems at premium prices. Wealthy people don't shop for the cheapest option. They shop for the best option. They value their time more than their money. They will pay premium prices for premium solutions. This is the market that makes business owners wealthy. Don't try this yet if you cannot deliver premium results. Premium pricing requires premium delivery. You must be excellent, but if you are excellent, you should be compensated accordingly. Poor people cannot afford excellent solutions. Wealthy people can and will pay appropriately. The practical application is to analyze your business or services. Who are you serving? What are you charging? If your target market is price-sensitive, low-income buyers, you are in the wrong market. Shift to serving wealthy clients with premium pricing. This might mean completely changing your offer. But the financial results are exponentially better. This strategy is forbidden because it challenges beliefs about fairness and accessibility. People think you should make services affordable to everyone. This is poverty thinking. Wealthy people know that premium positioning attracts premium clients and premium profits. Serve the wealthy. Charge premium prices. Try this when you can deliver premium results. Chapter 10, The Forbidden Lifestyle Strategy. The 10th forbidden strategy is living far below your means while investing the difference aggressively. Everyone inflates lifestyle to match income. The wealthy maintain modest lifestyles while deploying excess capital into assets. This discipline creates wealth faster than any other single behavior. Don't try this yet if you cannot resist status displays. Don't try this if you need to look rich now. Don't try this if you care what others think about your car, house, or clothes. This strategy requires valuing actual wealth over appearance of wealth. The forbidden truth is that appearing wealthy keeps you poor, while appearing modest keeps you wealthy. Every dollar spent on impressive cars, designer clothes, luxury vacations is a dollar not invested in wealth-building assets. That $1 invested at 10% return becomes $17 in 30 years. You are not just spending the dollar, you are spending the dollar plus all future compound returns. Thomas earned $300,000 annually, drove a Mercedes, lived in an upscale neighborhood, wore designer brands, traveled first class. He looked wealthy. His net worth was $200,000 after 20 years of high income. He was broke with expensive taste. His colleague earned $200,000, drove a reliable Toyota, lived modestly, invested the difference. After 20 years, his net worth was $3 million. One looked rich, the other was rich. The forbidden strategy is to cap lifestyle at a comfortable but modest level, then invest every additional dollar earned. If you can live well on $60,000, Maintain that lifestyle when your income reaches 100,000. Invest the 40,000 difference. When income reaches 200,000, still maintain the 60,000 lifestyle. Invest 140,000. This discipline allows massive wealth accumulation. Don't try this yet if you need approval from people who are broke. Your modest lifestyle will confuse them. They will question why you are not spending. Let them. Their approval is worthless. Your wealth accumulation is priceless. The practical application is to audit your lifestyle expenses. What is your comfortable baseline? What percentage of income exceeds that baseline? For high earners, this is often 50% or more. Commit to investing that entire excess. Not someday. Now. This requires delayed gratification that most people cannot sustain, but those who do become independently wealthy. This strategy is forbidden because consumer economy requires consumption. The system needs you spending to maintain GDP growth. Wealthy people spending nothing undermines the entire model. The moment you realize status displays are poverty traps, you stop participating. Live modestly. Build wealth quietly. Try this if you can resist social pressure. Chapter 11, The Forbidden Retirement Strategy. The 11th forbidden strategy is rejecting traditional retirement planning entirely and building passive income that exceeds expenses before age 50. Everyone plans to work until 65, then live on pensions and savings. The wealthy retire decades earlier by building assets that generate cash flow now. Don't try this yet if you believe working until old age is inevitable. Don't try this if you think early retirement is impossible without lottery winnings. Don't try this if you are not willing to build assets aggressively. This strategy requires completely rejecting conventional retirement wisdom. The forbidden truth is that traditional retirement is a trap. Work 40 years, save 15%. Hope the market cooperates. Maybe have enough to maintain your lifestyle in your 60s, by which point health is declining and energy is gone. You sacrificed your prime years for a mediocre retirement in decline. This is the conventional path, and it is terrible. The wealthy reject this entirely. They build assets that generate passive income exceeding expenses. Once achieved, work becomes optional. This can happen at 30, 40, 50. It has nothing to do with age and everything to do with asset income versus lifestyle expenses. Most people never think this way. They think in terms of retirement age instead of retirement income. Michelle worked corporate job planning to retire at 65, saved in her 401k, lived modestly. On track for a comfortable retirement in her mid-60s. Her friend built rental properties aggressively from age 25. By 40, her rental income exceeded her expenses. She quit her job and retired. Same timeline. Different strategies. One waited until almost 70. The other achieved freedom at 40. The forbidden strategy is to calculate your freedom number, the amount of passive income required to cover all expenses. Then build assets systematically until that number is reached. Real estate, dividend stocks, businesses, royalty streams, any asset generating passive cash flow. Stack them until passive income exceeds expenses. At that point, you are financially free regardless of age. Don't try this yet if you are not willing to sacrifice lifestyle now for freedom soon. This requires directing massive capital toward asset building rather than consumption. Most people cannot do this. They want comfort now. The wealthy want freedom forever. The practical application is to calculate your annual expenses. Multiply by 25. That is your freedom number, assuming 4% safe withdrawal rate. If expenses are $40,000, you need $1 million in assets. If expenses are $80,000, you need $2 million. Then calculate monthly investment required to reach that goal within your target time frame. If you have 20 years and need $1 million, you must invest approximately $2,000 monthly at 8% returns. The math is clear. Execution is where most people fail. This strategy is forbidden because it undermines the employment system. Early retirees are not contributing labor or consuming heavily. The economy wants you working and spending until death. Financial freedom means you can opt out, build passive income, retire early. Try this if you value freedom over conventional success. Chapter 12, The Forbidden Legacy Strategy. The final forbidden strategy is building wealth structures that compound across generations rather than just your lifetime. Everyone focuses on accumulating personal wealth. The wealthy build family wealth systems that persist for centuries. This is the difference between being rich and building legacy. Don't try this yet if you have no wealth to structure. Build wealth first. Don't try this if you have no children or heirs. This strategy is about generational impact. Don't try this if you are not thinking in terms of decades and centuries. This requires time horizons most people cannot comprehend. The forbidden truth is that personal wealth is temporary. You build it. You spend it. You die. It scatters. Family wealth properly structured compounds forever. The Rothschilds, the Rockefellers, the Waltons. These families are not just wealthy. They have systems that generate wealth automatically for every generation. This is legacy thinking. Gerald built a $10 million fortune through business, proud of his success. When he died, estate taxes took $4 million. Legal fees took $1 million. His children fought over what remained and spent it within 15 years. 3 generations later, nothing remained of his wealth. Meanwhile, his competitor built a similar fortune, but structured it inside family trusts, foundations, and corporate entities. 5 generations later, that wealth has multiplied to hundreds of millions, and the family still controls it. One built personal wealth, the other built legacy. The forbidden strategy is to structure wealth inside legal entities designed for preservation and growth. Trusts that control assets across generations. Family offices that manage investments. Foundations that provide tax advantages. Corporate structures that separate ownership from control. These are not just for billionaires. Anyone with significant assets should use these structures. Don't try this yet if you cannot afford quality legal and financial advisors. Proper structuring requires expertise. DIY legacy planning fails. But once you have assets worth protecting, investing in proper structure is the best decision possible. The upfront cost saves millions in taxes and prevents wealth destruction. The practical application is to consult estate planning attorneys and tax strategists once you accumulate significant assets. Generally, once your net worth exceeds $1 million, proper structuring becomes critical. They will create trust structures, recommend entity types, and design systems for wealth preservation. This requires investment. But the return is keeping your wealth in your family rather than losing it to taxes and legal fights. This strategy is forbidden because it creates permanent wealth concentration. The system prefers wealth redistributing each generation through taxes and poor planning. Properly structured wealth stays in families and compounds. The rich get richer not just in one lifetime, but across centuries. Structure your wealth. Try this when you have wealth worth protecting. You now know the 12 forbidden strategies. But knowing is not enough. These strategies require implementation. And implementation requires overcoming fear, doubt, and social pressure. Most people who learn these strategies will do nothing. They will make excuses. They will convince themselves it is too risky. They will listen to broke friends who warn against it. They will stay exactly where they are. This is fine. These strategies are not for everyone. They are for those who are ready to operate outside conventional wisdom, to face criticism, to trust themselves over the crowd. If you are not ready, wait. But do not pretend the strategies don't work. They work. The wealthy prove it daily. The question is whether you are ready to implement them. I told you at the beginning, don't try this yet. I meant it. Each strategy requires mental preparation. Each requires accepting responsibility. Each requires action despite fear. If you rush into these strategies half-heartedly, you will fail and blame the strategy instead of your execution. But if you are ready, if you have done the mental work, if you are willing to be criticized by people who are broke, then these strategies will transform your financial life. Start with one. Master it completely. Then add the next. One by one, these forbidden strategies become your wealth-building system. I have created a comprehensive implementation guide for each strategy. You will find it linked in the pinned comment. This is not theory. This is step-by-step execution. Download it when you are ready to act. The strategies are forbidden not because they are wrong, but because they work too well. Widespread adoption would disrupt the entire system. But you are not responsible for the system. You are responsible for yourself and your family. Use what works. Build wealth unapologetically. Don't try this yet if you are not ready. But when you are ready, try everything. The wealthy did not get wealthy by playing safe. They got wealthy by doing what others feared. Your move.